Good morning, students of class 11. Now today we will start financial statement of sole proprietorship. First of all, what is the meaning of financial statements? The financial statements provides a summary of accounts of a business enterprise, the balance sheet reflecting the assets, liability and capital as on a certain date, and the income statement showing results of the operation during a certain period. You mean financial statement? What is financial statement? The financial statement is a statement which provides a summary of accounts. Which accounts? Summary of accounts of assets, liabilities and capital as on a certain date, and income statement which shows results of operation during a certain period. Certain period means for a given period. That period may be 6 months or 1 year or 1 quarter. So that financial statement may be defined by different institutions, such as financial statement are the records that online the financial activities of a business, an individual or any other entity. They are meant to present the financial information of the entity in question as clearly and concisely as possible for both the entity and for readers. In this way, financial statements are reports. Financial statements are reports that shows how income and expense have affect the company as a whole. They provide a snapshot of current financial standing of a business. In this way, we may focus on the objective or need or importance of financial statement as follows. Financial statements are a collection of reports about an organization's financial results and financial condition. They are useful due to the reason mentioned below. The first, to determine true and fair view of financial performance by reflecting profit or loss. In any organization, what amount of profit or loss is reflected by that very financial performance through a financial statement. Next, to determine true and fair view of financial position by reflecting accounts or values of assets and liabilities. The second objective of financial statements is it is to determine true and fair view of financial position. Means any business enterprise, how far the true and fair view of its financial position, that is reflected by accurate value of assets and liabilities shown in the balance sheet. Third, to determine efficiency in conducting business operation through comparison with previous years. if financial statements of every year is prepared, then an individual business enterprise can compare with the performance of financial efficiency from previous year to the current year, and on the basis of that they can make a future prospects. Fourth one is to determine the efficiency in conducting business operation through comparison with previous years. To determine the ability of business to generate cash and the source and use of that cash. Means through financial statement one can have the ability of a business to generate cash in hand. How much cash they dealt with in their business, they can determine its ability through financial statement, and the source and use of that cash in the business activities. Next, to determine how expense can be controlled and source of income can be enhanced. In any business enterprise, expenses can be controlled by comparing expenses incurred in different years. Means that expense may be control over the business by going through the financial statements of previous year, and how they can enhance their financial resources, that can be also observed through financial statement of the previous year. Next, to determine whether a business has the capability to pay back its debt, one can judge whether the business obligation, you mean the debt of the business, can be repaid, can be returned by that very business enterprise on the basis of their financial statement. Means in balance sheet how much cash or bank balance they have. On the basis of that one can having sufficient economic or financial soundness to pay their business debt. Next, to determine financial resources, to determine financial ratios from the financial statement, they can indicate the condition of the business by going through the assets and liabilities, different items. They can prepare different ratios, accounting ratios, through which they can indicate the condition of their business, like debt equity ratio or debtors turnover ratio or interest coverage ratio. These are the important accounting ratios through which one can have indication the condition of the business. And last one is to investigate the detail of certain business transaction as outlined in the disclosure that accompanying the financial statement. Means in financial statement how far the transaction are truly recorded or not, it can be outlined in the disclosure of that accompany of financial statement. Let me finish today. Now in the next day we will discuss about parts of financial statement.